Be sure to watch my TED Talk on londonreal.tv. Cool, guys. Let's do this, yeah?
Yep.
Okay. This is Silicon Reel, the video podcast dedicated to the people of the London technology startup scene. I'm Brian Rose. I also host London Reel, which is a similar three-person trialogue format. We have guests like Tim Ferriss from the 4-Hour Work Week. We had George Galloway from Parliament in here. We had Max Kaiser from Russia Today yelling about Bitcoin. But my co-host today is Mr. Joe Scarborough. He is a former CFO of an oil and shipping company, and now I believe you're the co-founder of tobeseen.co.uk.
That's right.
Which is the online community for the entertainment industry. And more importantly, Joe has a beard. And he is one of 3 men with beards in this country called the Three Beards. And they host a variety of things, including the weekly Silicon Drinkabout, the monthly Don't Pitch Me Bro, and the quarterly Digital Sizzle. Is that right?
Yeah, absolutely.
And if you haven't been to the Drinkabout, you got to go. It's kind of like something we do after Silicon Reel every week. It's basically a meeting of tech people either interested or in the tech business, or sometimes if you want to just go look at people in the tech business, like a zoo. You can show up. It doesn't cost you anything. You don't have to reserve. It's got a cool vibe. It's a lot of fun. And I always tell people it's strange because you meet people who are excited about their jobs, which is not a normal thing. So it's a lot of fun. Come check that out. Joe, thanks for being here. I appreciate it. In the hot chair. Yeah. And our guest today is Mr. Samad Masood, who is the program director of the Fintech Innovation Lab here in London. We've been talking about this for the last couple episodes here on Silicon Reel. I really want to get to the bottom of this thing. You're also a technology research manager at Accenture, where I believe you manage UK technology and global infrastructure.
Yeah.
Okay.
Research of those industries, yeah.
Okay. Also, your career began, I think, as a technology journalist, and you became an analyst, right?
Yeah.
Okay.
That's so. I've always been in some way observing the technology industry, but I've never really actually done any technology or created a startup myself, which is, puts me in a strange position, actually. Yeah.
Well, that's good. Well, we're going to talk about this whole incubation thing. You are the program director of the Fintech Innovation Lab, which basically is an annual mentorship program to help entrepreneurs and early-stage companies that are developing cutting-edge technologies in the financial services sector. Is that about right?
Yeah, that's pretty much it.
Okay.
The Fintech Innovation Lab is the difference between the lab and other accelerators that I can see is really what we're doing is bringing together a bunch of really big IT buyers rather than, let's say, investors. So we bring together about 14 large global banks. You can see on our website who they are, but it includes Goldman Sachs, JP Morgan, Citibank, Barclays, RBS, Deutsche Bank, UBS. It's probably easier to list the big banks that aren't there. And it's run by Accenture, which I work for, and the idea is that we have startups applying. They pitch to the banks directly, and we're not just getting sort of like the junior guys in the banks. We have the top IT directors or the European CIOs or global CIOs from each of the banks, and they sort of listen to these pitches. Together, the banks choose the startups that they want to go on the program. And then the 3-month program sort of kicks off. And those startups on the program, it's kind of, mentorship is part of it, but it's also really a kind of like a agile development opportunity because the startups on the program basically get to meet a lot of the different people within the banks who might use their technology, who might be involved in implementing their technology if the bank did buy it, who might have good feedback in terms of how they should shift their proposition in terms of enabling the bank to buy it or hitting on the right thing. So for example, a startup might come and they've got some great technology that they think does A, but a couple of the banks actually really think it can do B, and another bank thinks it can do C. So on the program, they can explore A, B, and C with all those banks in a non-salesy environment and understand which of these propositions, which of these use cases might be better for them to take. maybe they can take both of them. You know, maybe the banks will help them or be interested in both. Maybe as a business decision, they can go down two routes or stick with one route. And at the end of the program, they really should be in a much stronger position with their business in terms of understanding the pressures and the things they need to do to sell to a large corporate. Banks are the biggest IT spenders, private sector IT spenders going. And selling to a bank is a really complicated thing. And it's almost this kind of thing of pride that they say in the industry. If you can sell technology to a bank, you can sell it to any large corporate because of the regulatory issues, the security layers that you need to get through, and all the different people you need to kind of get to say yes before they actually start even, you know, looking at procuring your technology. So at the end of the program, you should be in a position where you've had loads of feedback from multiple banks, and you've been able to understand where you should be putting your investment. And in fact, we finish with an investor day where it gives the startups an opportunity to pitch their new propositions to investors. Basically saying, you know, before the program, we had this technology that we wanted investment, but you didn't know whether any large corporate would buy it. We've just spent 3 months with the world's biggest banks, and yeah, actually 3 or 4 of them are really interested in this. So, you know, show me the money, you know, that kind of thing.
Well, what's the timeline for this? Just to give people, I know you have like a September deadline for people applying, and then I think you do kind of like a Dragon's Den choosing process, and then you incubate, what, first quarter next year?
Yeah, so the applications are open now, and they close on the 8th of September. The process is we have executives from the banks who are scoring those applications, and the top 15 or so applications will go through to the Dragon's Den, which is the interview day.
Are there any limits on who can apply? I mean, I guess like a public company can't apply. I mean, does it have to be kind of like small?
Actually, the way we define it is you have to have minimum, you have to have a beta technology. So you can't just be coming with an idea. You have to have some beta product at least that you can play around with and show. But at maximum, you can't already be established in the financial services industry. It's got to be innovative. It's got to be new. So if the banking industry already knows you as a company, then you know you're not for this program. Obviously, if you're a large company that already can spend sales dollars and marketing dollars to get into the banking industry, then the banks simply won't choose you because they know you can do this yourself. They are honestly there to help small companies and entrepreneurs get a foot in the industry. They really want to see new innovation, and they want to help. They know how difficult it is for smaller companies, and they know that makes it harder for them to buy and find smaller companies and new ideas. So really the definition is if the banks think that they can help you and they can help you significantly change your growth potential through this program, then and they think that what you have is something that they can use, then you're right for it. And it doesn't matter if you could be a company that's been going 15 years and employs a few hundred people, or you could have been going 2 months. You know, it's as broad as that.
And it can't hurt to apply. They can just go.
It can't hurt to apply, basically. It can't hurt to apply.
Okay, so that's September, and then there's the Dragon's Den selection. When do they choose who's going to be incubated?
So by the end of October, the startups or the companies that have been chosen will know.
Okay.
And then it starts in January till March, the actual program runs. Because it takes us that long to kind of, I mean, we've got Christmas and all that, but we kind of, once we've chosen the companies, then we work with the banks to really understand which are the best banks to be directly and responsible for mentoring them. So on the program, you can talk to any of the banks, but specific banks will be given responsibility to mentor you directly, so that, you know, we don't get to the end of March and no one's actually, you know, we forgot about one of the companies. You know, someone is going to be responsible for each company. And
do they move in together into a space?
Yeah.
Okay. All right.
So last year we were at level 39 in Canary Wharf, and that was a great space. We were one of the first programs there. So we do house everyone together. The idea being that it's got to be as easy for the bankers. You know, they don't pay anything for this. We don't pay them anything. They're using their free time. So it needs to be easy for them to come. And if it's in the Square Mile or it's in Canary Wharf, then that's easy for the bankers because that's where their offices are. So
okay, and then Jan to March you incubate, and then there's like is it a pitch day, the final day in March, or do people present all their tech to everyone? And are there VC people there on that final day? I know you're not trying to necessarily foster VC. You're trying to foster the growth of the companies.
We call it the Investor Day. We have a sister program in New York, and they call it the Demo Day. And I think their format is slightly different, where they're kind of demoing what they've done. What we do is we take half a day. We invite a lot of senior bankers. We invite a lot of media. We had it last year at the mayor's office. We hopefully will have it there again this year if we can find a big enough space there.
Cool.
We had the deputy mayor presenting.
Boris didn't show?
Boris has put his name to our program, but he's a very busy man.
He is busy.
He's a very busy man. But the deputy mayor is also perfectly suited because he's deputy mayor for business. He's also been an entrepreneur himself, so he actually gave a really great speech on the day about the challenges he knows that everyone faces and how this sort of a program can really help London and things like that. So it was really great. But the benefit for the startups is, we have investors there, but I coached the startups on that day really to focus on what's new about their proposition. Don't go into the details of the tech or demoing. It's going straight to the, we help this industry like this, or we help businesses save money here or make money here. We reduce the cost of that. Really get down to the specifics, really excite people. And then we have networking afterwards, so because people can come and talk to you afterwards. Really, the benefit is, there's investors, there's other senior bankers there, there's some government people, but there's a lot of media.
And the occasional beard.
And the occasional beard, We invite the 3 beards, we invite other people in the ecosystem, because for us, it's just trying to get these guys as much exposure as possible.
I got introduced to you a few weeks ago at one of the Drinkabouts. I think Bryce introduced me, and you told me about this program, and part of it almost seemed like philanthropy, because like you guys set it all up. The bankers donate your time. Accenture doesn't really get anything specific about it, nothing financial.
Yeah.
It's a strange program in that sense. I mean, you've probably seen a lot of incubators in the area, but most of those take equity stakes and stuff like that. I mean, why are you guys doing that, or why is your program set up like that?
I mean, I agree with you. I think it's a great model. When I have to say, I can't take any credit for coming up with it. And when I was told, asked or told to do this program, I was told, this is how the program works. And I was sitting there like, wow, this is awesome. This is like, it all just kind of fits together nicely. The banks get something out of it, Accenture. I'll explain Accenture's position on it and why they're involved and why we came up with this.
For people that don't know, can you tell people what Accenture is? Because some people might not.
Accenture is the world's largest IT services and outsourcing company. We focus, on providing IT consulting, IT implementation, outsourcing. We do some business process outsourcing. And we're a global company. I think we are hitting about 29 billion revenues, and we have about 260,000 employees. So
they're big.
Yeah, we're a very, very big company. But we're also renowned for being very flexible and very, we're at heart consulting and technology services company. So we're kind of, we mold to whatever the industry is doing, and we partner with a lot of things. I mean, IBM is one of our biggest competitors, but also one of our biggest partners. It's one of those industries where there's a lot of this kind of co-opetition going on. So we're quite comfortable with that sort of stuff.
You were saying, so when you got told about the program, you were surprised.
Yeah, no, I was happy that such a program kind of existed, because there is a challenge, I think, with accelerators putting in equity stakes, and whether that kind of changes the focus and such. And I think really what it boiled down to was we wanted to do a couple of things. So we wanted to help London, and in New York, where the program started. The aim was to help entrepreneurs in New York, and we partnered with the New York City Investment Fund, or it's actually called the Partnership for New York City Fund, which is a non-profit fund set up to invest in entrepreneurs in New York in lots of different industries. And they worked with Accenture to come up with the fintech concept and how it worked. And we thought, well, we can apply this to London as well. And the aim is that we can take an asset that a city like London has, which is financial services, and the asset of Tech City and Silicon Roundabout and all the great things that are happening here, and try and bring those together in a kind of, I kind of think of it, it's where the rubber hits the road. You're getting companies and you're getting people who buy technology. You're getting people who make technology, people who buy technology, and you're getting them to actually give it a go and try it out over a 3-month period.
This would never happen without you guys as a middleman. Probably.
Yeah, and let me explain why we do it. Specifically, Accenture gets out of it. So there's, all these banks are our clients, and we want to be able to provide them a platform for innovation. All these banks do this sort of stuff separately. They have their own engagement with startup communities or their own innovation programs, but by being a sort of middleman, we bring together all the banks together in a kind of independent way, and they can then collaborate together on things.
Let their guard down a little.
And let their guard down a bit. It's no one bank leading this. So, and obviously we get a bit of kudos for that. We're helping the banks. The banks think that, I call it the Accenture's cool factor. We want the banks to think we're cool, and that's one big objective. But another objective is really investing in London and investing in the economy. We're a massive part of the UK economy. We're massively involved with loads of companies, and it's in our benefit, and it's also in our sort of our own being part of the community to kind of invest back and help entrepreneurs grow. Okay. The third thing is also it just gives us an insight into what's hot. What hot technologies are happening out there, and it's an easy way. If you think of all those things, it works out for us. Really.
Joe, you're a finance guy. What comes to mind when you hear about this? You might have known about it last year, but what goes into your mind when you hear him describe that?
I think it's good. I don't think enough of the bigger financial institutions really put enough value in the type of innovation that's in a startup. I mean, they all innovate. They all have to innovate in order to keep up with the market. But to get a really the kind of just do it attitude that you get in a startup, I think it's really important for them to kind of get with this kind of program and with that pattern of innovation that comes in a startup, and that is fairly radically different to what happens in their own kind of innovation departments.
We always bump into the innovator's dilemma on this show. I mean, I work for almost 10 years in banking at a company called ICAP PLC, and we saw technology coming, we saw electronic broking coming, and we ran from it. We were like, let's keep making our money in our old school business model. We've had TransferWise here, we've had John Collison from Stripe here. They all talk about how, what they say? They say they're not worried about the banks ever competing with them because they probably won't do it till it's too late, till they have to buy the technology, that kind of thing. But obviously what you're doing is trying to subvert that. You're trying to kind of tackle that innovator's dilemma and get the innovators talking with the old school guys. Right?
Yeah, I mean, the innovator's dilemma is one of those things. Sometimes I wonder if it's ever
is it overused?
No, not at all. I think it's a real thing. It's a real thing, and the fact is, if you're making money out of something that has made you money for a long time, and then you see something new that makes you much less money. In fact, you have to sink a lot of money into it for an outcome that's undefined and 5 years in the future. I'd like to meet the guy who makes that decision, because I don't think many of us could make that decision. And it's a natural human thing. And with what in my personal hopes for this program are that by bringing the banks together, because one of the key things in our program, once we get to the end of the program, all the banks sit together in a room, all their senior guys who met at the start and chose the startups, they sit together and we do what's called the Chaperone review. Chaperone is the term we use for the guys within the banks who are mentoring directly or kind of chaperoning the startups through their program. Sherpa might have been a better term. Chaperone's a bit creepy, but...
Sherpa's a little creepy too.
Yeah, I see you're onto
banks carrying their bags.
Basically, yeah, I can think up a better one. But the chaperones then report back to all the senior sponsors, so the CIOs from the banks, and they get to share that. So they all hear what the other bank thought about this company or that company, and I think there's a big opportunity for them to. A lot of people say to me, well, surely they don't want to share that information. And yeah, there are certain technologies and certain startups which would be so differentiating for one bank that it wouldn't work in this format for the program. But, more and more of technology, I mean, some would say 80% of technology used by corporates is non-differentiating. It's something that everyone does anyway, and if we can all do it cheaper, then great, you know. And it actually creates, you have this room full of the banks, you have the startups, and when let's say there's one startup that they all really like, and some of the banks didn't have a chance to work with them so much on the program, but they hear the other banks are saying, yeah, that's really good, you know, then that gives them the incentive to try and get over those innovation barriers and go, well, we better quickly execute on this because all our competitors are also keen on this technology. And yeah, the person who gets it first just gets to cut their costs sooner, you know, and it's not going to, you know, make or break one bank over another, but it means that you can do it quicker than the other bank. And so ultimately it's giving them some incentive, some, you know, they're collaborating, but they also get to a stage where they go, we better do this quicker than the next guy because, you know, we've all seen this now.
Have you ever had like a friendly conflict at the beginning when they're picking which startups they want to work with, or you're kind of separating them?
Yeah. I mean, we've
we've
had startups where I'll say to the room at the end of the interview, does anybody who wants to mentor this startup? And everyone's hands go up. And you go, okay, that's not going to happen, you know. And so you've got to, you know, but they're all good guys. They're really, I'm really happy with the people involved in the program from the bank side. They all take it in the essence that it's meant to be, and everyone sees it first and foremost as something to help London, help entrepreneurs. You know, going through this program does not guarantee you a sale with a bank. You know, it is very, very difficult to sell to a large corporate, and it takes time, but it gives you a big boost. And if you get to the end of the program and you decide that, yeah, you don't want to sell to a bank or a large corporate because you've been through that intensive process and realize, you know what, I have the funding, or I don't actually, my proposition isn't watertight enough for this, then that's great too, because you learned that in 3 months than taking 3 years and meeting 2 or 3 banks.
Right. So what happened last year? What's, you know, how many companies came along? What was their fate? And what are you going to do different this year? What did you learn, you know, in the process?
So it was our first year in London.
Because New York, it's been going for 5 or 6 years?
No, New York is now just finished its 3rd year.
3rd, okay.
Yeah. So New York was finishing its 2nd year as we were starting our first. Okay. And we had 62 applications.
Wow.
And of those, we shortlisted 14. Then we were aiming to choose 6, but we squeezed in a 7th. We all agreed that, okay, we can get another one in here. And the companies, some are quite well known now, I guess, within London, but Digital Shadows was one.
Okay.
And Growth Intelligence. BehavioSec, which was doing behavioral security, then there was a company called CallTrunk, which is now called Open Voice. They sort of pivoted and decided they were going to be focused on something slightly different at the end of the program. The Open Bank Project and Kibu was another one, which is personal finance management tool. And I'm going to embarrass myself by forgetting one of them. Have I given 6 or 7? I'm sure there's one other. Digital Shadows, Growth Intelligence, Open Bank, BehavioSec. Yeah.
Okay.
Yeah.
And so did any of those end up, you know, raising money? Did they work with the banks? Did they, obviously, if you still remember their names, they're still around. So.
Oh, yeah. I'm in touch with all of them. And, you know, we're still, most of them, if not all of them, are still having discussions with the banks.
Okay.
You know, and are, you know, I forgot, Waratech is the 7th. Okay. Waratech was a really, really interesting company, and they've done really, really well out of this. And they're actually not just applicable to financial services. So they do virtualization of Java, and which I'm already getting technically out of my depth there, but what it does is enables you to virtualize Java implementations much more than just beyond the hardware level. So you're going into the software level, software virtualization.
So is there anything you're going to do differently this year after last year, or is it kind of the same model? I mean, you must be climbing a big learning curve doing something like this.
Yeah, we learned a lot of stuff, and there's a couple of things that we're doing differently. So first is, during our first year, during the program, each bank had an event. So each bank, every week, we'd have 1 or 2 events with the banks, and one bank would basically open its doors, invite all the startups to their bank.
It sounds like a fraternity rush, by the way.
Yeah.
Like everyone wants to be the big brother and they want to show how cool their house is.
Exactly, yeah.
Okay.
And they would then put on a few drinks or nibbles and they would give a presentation on their bank or a theme. We asked them all to give a presentation on a theme. So some of them did like procurement, some did security, some did like the growth of technology and banking, some, But really the aim was for us to get a few more people within the bank socializing with the startups, but also for the startups to kind of get a bit of insight into the different cultures of the banks. And it's quite eye-opening when you go to 12 different banks, which come from, 2 different continents, and they've all got different cultures, and they're all very different types of banks. So that worked pretty well. But what we learned from that was actually one of the things that worked really well was speed dating. And what we're doing this year is in the first 2 weeks of the program, each bank, it's going to be intense, but each bank will do half a day of speed dating on their own premises. So all the companies turn up and they get speed dating with a series of different executives. So banks, you have the IT guys, you might have people from different parts of the IT division, because IT divisions are massive companies in themselves. Then we'll have senior executives from different parts of the business, so the business side. So that might be the retail banking or mobile banking, or might be the different trading desks, etc. Or wealth management, etc. And that gives those senior executives an opportunity to very quickly meet these startups. And if it sparks off any initial ideas of, yeah, that's great, that we should talk more. It's lead generating. And the chaperones, who I mentioned earlier, who are kind of from each of the banks and helping this, that gives the chaperone and each of the startups a few leads at the start of the program to go, okay, let's follow up these guys, or we thought you'd be a real hit, but you just spoke to the most senior guy in that division, and he doesn't get it. So we need to find another way to get to him, or we need to actually think about there was that other guy who really liked what you're doing and thought you could apply it to their part of the business.
In this whole process, I'm just curious, how much is the technology and the business idea, and how much is the person behind it? I mean, that's why we do this show, to find out the people behind the tech. And a lot of people that have been here said they invest in people ultimately, So, I mean, speed dating, I guess, is getting to know the person. But you must see it on the front lines. I mean, obviously, a really cool, motivated guy with no business plan is no use to them. But, how much is it?
Well, I mean, one thing I'll say is that speed dating is not the best way to learn someone's personality or whether you can work with them. It's a quick way to really quickly. Is this
from your own personal experience?
No, yes, it is.
Yeah.
You're right. You exposed me.
I've speed dated before.
Yeah.
Yeah, it's a bitch.
But the speed dating thing, it's great for very quickly getting a lot of information and then having a few early thoughts and then following up with. But in terms of your question, is it the person or is it the technology? From my personal viewpoint, I would say it's 90% the person.
Wow.
Because it's like all business, and I think, and again, this is me talking in my experience as a journalist and seeing the .com crash and then seeing the new bubble being created right now. It's about business. It's not about technology, and business is about trust. And it's about knowing you can work with someone and feeling that, there's this term shared value, which is terrible. It really means you get something out of this, I get something out of this. And if we both know what we're both getting out of this, that's cool. We're okay with that. And actually, what I've learned by seeing businesses interact with each other, if one business doesn't know what the other business is getting out of this, then they want you to make something out of this because they want you to be as driven into it as well. So actually, a lot of the startups who come to me and say, I want to apply, what am I going to say, what should I focus on? I always say, focus on the business side and focus on what you want from this. Because it's human beings who are choosing you. And those human beings want to help you. They want to see you grow. They want to sit back and go, I was involved in that guy. He's doing really well now. And they want to invest in you. And we have certainly had examples of great technology which didn't get through because the panel did not think that the person was someone they could work with.
Good business. I want to ask Joe the same question. I mean, you rub elbows with all the people at these drinkabouts and Don't Pitch Me Bros and everything. And I mean, you get to know all these personalities. You probably hear, business ideas that overlap each other and things.
Absolutely.
Would you say 90%, or what's your take on that same question?
Yeah, 80 to 90. Definitely.
I thought you both were going to say 50-50. That's crazy.
No. It's so much about people. My wife's a great one. She's like, this tech thing, it's sucking the emotion out of things. It's really not. It is all about people. Silicon Drinkabout is about people. Don't Pitch Me Bro is about people helping people with their propositions. It is. It's relationships, and the more people understand that if you help somebody and you don't expect anything in return, that kind of pay it forward culture, you will get it back, because you will get a reputation as somebody that helps, and then people will want to help you.
Yeah, which is pretty much what you guys do, pretty much what you guys are doing.
The thing is, I'll say, particularly in B2B technology, so in B2C technology, I'm simplifying it, but you can basically create an app or a website and test the market straight away. When you're selling to businesses, it's a lot more complicated, because you have to customize your product. So it's probably, if you came to a business with a product that's only half thought through, but then you worked really closely with them to think that through with them, you probably have just as good a chance as coming to them with something that's fully thought through. And it's like, it just takes time and trust and relationship to do that. And that's what most of the startups that come to us have, they're not fully baked. They've got technology. They've maybe got making a bit of money. They want to see if they can make this work with a large corporate. And that's what we're trying to help. But all that is based on trust, relationships, people being able to communicate, and people will help you. People will help. If you've got half an idea, they'll help you make it into a full idea, because they can see the other side of what they would do with that technology.
Right, they get personally vested probably in what you're doing. This is the part of the show where we try to ask you a couple devil's advocate questions. I think you have one ready, but I was mentioning the Innovation Lab to a few guys that have come through here and sat down at that chair, and one thing someone said was they thought at this day and age in 2013 there might be over incubation, as in you get all these guys ready, you set them up for these. They think they might get funding, and then they just stop, and it's like, okay, now 15 companies have been set up, they're not going to get any funding, and they're not any further. And I must say, after you describe it, it seems like a lot of upside getting to know these people. But do you hear that argument a lot, and what do you say to that?
So, I'd be interested in your view on this.
I'll get your answer after.
I think the over incubation, I think there can be too many things going on that becomes distracting for an entrepreneur. That there's so many things that they could get involved in. They've got to really make some tough decisions about, do I apply to this accelerator? Do I take this guy on as my mentor? How do I get rid of him if he's terrible?
Yeah, six months out of your business cycle, you're going here, going there.
Exactly, and there can be too many things, but I don't think that's up to the individual to decide what's best for them. And having loads of choice and loads of activity in the ecosystem, I think, is great. I'm really happy that there's the opportunity that we could even be suggesting there's over incubation. But there's one thing I'd like to pick up on what you said about getting investment. And one interesting thing is that in our program, like I said earlier, I see it as where the rubber hits the road. You've got some technology and you're working with clients. It's not you've got some technology and you're working with mentors to get you to a stage to sell some equity to then maybe see if you can, which actually works in B2C probably better, because like I say, you don't have to work on long sales cycles. You can just put your app on an app store, or set up an online website and just do some PR and marketing, and you can see pretty quickly. In the B2B world, there's some of our companies and some companies that would come to us, I wouldn't be surprised if they don't actually need another round, or they come out of the program in a much better position to negotiate for better investment terms, because they've got customers. They've got big customers, and all they need to do is keep growing that. I think there's a hangover from the dot-com era where we think, an exit. An exit means a certain type of thing. I think there might be a new generation of entrepreneurs which are thinking, and I think you can look at someone like TransferWise, and you were sort of saying that as well. They're not scared of the banks. They're just going on doing things. Companies now, there's the opportunity for you to just get on with it and do it. And you don't need to be thinking just about when is my exit?
Yeah,
when
the finance. I mean, we had Simon Cook from DFJ Esprit, a big VC manager, and he said the same thing. He said, you shouldn't be working toward getting my phone call. You should be working toward, getting cash flow, building your clients, making your customers happy. It's not like I give you, a chunk of money and then everything's going to be okay. He kind of reiterated that. Joe, what's your thought on that same question?
I think the incubators are the same as anything else. There are a lot of incubation, companies or organisations out there, and I think in the same way that some businesses are good, some businesses are bad, some are kind of good at what they do. Maybe they change it up a little bit. The same thing will happen with incubators. The startups will go in and they'll either come out better and tell everybody, or they'll come out and say, I'm not really sure that was worth my time, and that will get around. And the incubator will either need to improve on those points and become a more value add incubator, or it will just stop running. Because whoever, if the incubator is passing those on to investors and the investors are not really impressed, then they're not doing their job on that side. It's just one of those natural cycles where if there are too many, then the weakest will just have to drop off and the strongest will prevail. And the startup community is such that the strong ones and the ones that really provide value, everybody will know about, because they will say, I went there for 6 months, best thing I ever did. And that's not to say that there'll be 5 or 6 that are the really strong ones. Different incubators provide different value to different startups. So if one has got a much better kind of retail proposition and they can help in that sector much better, then they'll get renowned for that, and they'll start to attract just those types of startups. So
it's something Colin and I were talking about. I mean, just getting the ear of someone that knows the CTO at a big bank. I mean, like you said, doing business into a bank is such a difficult process. So like just giving people that introduction, that kind of information flow. And like you said, ultimately you're introducing these people to their future customers, not their future investors.
And I'd say it's not just, I don't want to be beating up the banks, because all large corporates are difficult to sell to, large businesses. And what we hope with the FinTech Innovation Lab is that you have, if you've been able to do it with the banks, then it should be a breeze doing it to another corporate.
One thing that always comes up on the show is Silicon Roundabout versus Silicon Alley, Silicon Valley, and we always seem to talk about this, and I'd love to get your thoughts, both of your thoughts, as where are we? Obviously, we don't see those big public exits that the States has. Everyone has to admit that fintech is one of the most exciting things going on in London. But in your opinion, what do you think is missing in London, or is there anything missing when it comes to those major centers as far as a mentality? Does it need more things like what you're doing, more exposure to investors?
I'll be cautious here, because I've not done any, having a research background, I've not done any real detailed research into this. But if we were just going to be completely simplifying it, I would just say the fact is there's more money in America. That's it. People talk about, in Europe and the UK we're a lot more cautious. And I think that's true. We're culturally more cautious. That's totally true. But they also have more money. So I think we've got to get over that. And the getting over we need the big exit in Europe, I'd rather say we just need the great businesses. We need the profitable businesses. And actually, what's better bootstrapping than never getting your $1 billion investment, but becoming a $10 billion business without it? Because it's tough in Europe, but it creates, and I think it always has created, a level of innovation, particularly in the UK, which I personally think comes out of the culture and attitude we have here, which is we're hard on ourselves. We don't make it easy for ourselves, and it's a completely different attitude from the US, and the US has done, we all know, awesomely at this sort of stuff. But the UK isn't too bad, really. We punch above our weight historically in terms of innovation, and I don't think we should worry too much about trying to replicate another model.
Joe, is that something you come up with all the time? Do people bring it up, or do you think about it?
Yeah, like, I hate the where is the next Silicon Valley question.
Yeah.
You know, I don't want there to be another Silicon Valley. It is what it is. I want London to carve out its own shape. It doesn't need to replicate anything else. You know, obviously it is you know, a number 2 or perhaps a number 3 in the world for startups, but it's on a path, and I think it's only going to go on to do bigger and better things.
Yeah, and it's
especially in finance.
Yeah, and it's on the doorstep of Europe. It's got so much potential.
Yeah,
I think when the Americans go straight to Europe, they usually screw it up. You know, it's just it's hard to understand it without being here. You know, kind of on the doorstep. You know how it works. Samad, I want to ask you a question. If they sacked you from Accenture tomorrow, I'm not, hopefully not. But if they did, and you had to sign like a non-compete, you couldn't do any research, you couldn't do anything like that. Well, and I gave you some seed capital, you know, 5 or 10 million pounds. What would you do with yourself? You know, is there a startup you would like to go run after, or you can't go to an island? Is what I'm trying to say.
Damn. I could buy an island and then sell some. Yeah, I mean,
you don't seem like the kind of guy.
I could be the Uber for islands.
Okay.
Yeah. I'd find capacity on beaches and I'd resell it. No, I mean that. Let me answer your question in a different way.
Okay.
I'm not. You know, I don't see myself as an ideas guy. But a lot of people talk about, you know, making your luck or creating opportunities and such like that. And I'm coming to think that actually what it is you've got to look at what assets you have in and that might be your personal skills, or it might be, you know, something you literally own, or access to a network you have, or, you know, you've got to look at those assets you have and then how you can turn those assets into something that's profitable and fulfills you as a person. Rather than going, I want to create, you know, the best website dedicated to peanut butter based recipes in the world, but actually I've never made peanut butter, I don't know anything, but I'm going to teach myself from scratch. And, you know, don't try and pick this sort of ideal, what you really want. Look at what you've actually got and how you can turn that into something really amazing. Because the stuff that you've got and the experiences that you've had, no one else has that. And all you need to do is piece that in the right order to create value for someone. And whether that's, you know, making, getting employed by someone else, or whether it's making something that you run yourself, it doesn't really matter. Because for me, I know this is going to sound really cheesy, but it's a bit more about personal fulfillment. And, you know, I just want to feel happy with myself, that I'm doing something that I enjoy. And I'm very lucky right now to be doing that.
Joe, you must see that a lot, where people have a great idea, but then if they look in the mirror, it doesn't reflect what they have. I mean, we had Jeff Lynn from Cedars here, and he was going to business school here in London, and he met a guy who needed basically a lawyer, you know, which is what Jeff is, and needed someone who could sort through all these legal docs to, you know, do these startup companies. And he's like, that's ultimately why he partnered with me, you know, because he knew what he brought to the table. But I mean, do you see that in the Drink About, where a lot of ideas are flying around, but you're like, okay, what have you got? Or what are you good at?
Yeah, I mean, you see a lot of ideas being discussed, and quite often people say, hey, you know, do you want an idea? I've got an idea, I'm never going to do anything with it. I think it's great, but I'm just not the right person for this idea. And they'll give it away, and someone else will go, oh, I kind of like that, you know. And so that kind of happens all the time. And you'll find with people that are doing their thing, they're concentrated on their thing, but because they're ideas people, they're still coming up with so much stuff, and they'll just talk to everybody about it. You know, they don't keep a secret black book of their best ideas that they're going to do when they get around to it, because they know that someone else will come up with it eventually. Yeah. So they just chat about it, and you know, ideas kind of evolve that way as well. You say one thing, and someone else goes, "Oh yeah, but you know, kind of what you were saying earlier. If they've got proposition A, but actually it fits on B better, just chatting to people and kind of being open about your ideas actually helps those ideas evolve. So yeah, they kind of fly around all the time.
Oh, that's well said. All right, Samad, I'm going to hit you with the advice question. This is a good one. But if you could make a phone call to the 20-year-old Samad, and you could give him a bit of advice, what would you tell him to do or not to do?
I'd say, listen to the old guy on the phone, and the 20-year-old will be going, what? Who? No.
Yeah, I'm not saying you would take the advice. What would you tell him?
I would probably say, just do more adventurous things, take more risks, because ultimately it's probably going to work out in the end. What I realize now about what bootstrapping really means, and what I've learned from seeing entrepreneurs and seeing the courage they have, is that ultimately you will make it work. So it doesn't really matter where you go and how you stumble or whatever, because you will make it work. You've got those skills to do that. And you know, I would just tell the younger me to just be a bit braver, I think.
It's something we hear a lot. Everyone always says, like, especially when you're young, before you have the mortgage payment and before you got the diapers, just to go out there and just do some crazy stuff and take some chances, you know, before you have all those commitments.
Yeah. Well, I don't have those commitments now.
Well, there you go.
But yeah, yeah. No, I agree.
And on that same note, what's the best advice you've ever been given?
It was actually that phone call one. So it was listen to people who are older than you. Because,
really?
Yeah, because a quick little story. I was at a bar. It was a big night, and you know, lots of people there. So and was outside chatting to a guy. Turns out he's 10 years younger than me, and the other guy is 10 years older than me. And so we're like, oh wow, we're all like 10 years apart. So that me and the younger guy turn to the older guy and say, so tell us, what's it like? What's the future like, you know? And because you're obviously still cool, you're hanging out here, and you know. And he goes, yeah, okay, well, the one thing you guys really need to know, the one thing you need to know. Listen to the older people, because they really know what they're talking about. While he's saying this, me and the younger guy change subject. We're like, yeah,
nice.
And he's in the background going, yeah, I thought that old lady who told me, and I really wish you know.
Yeah.
So it's kind of, you know, for me, it's that's my advice. But like all advice, you're probably not going to stick to it. So
yeah, no, that's well said. And the final part of that question is, you know, to the 20-year-old listening, or the 25-year-old that, you know, is starting in the business, you know, starting and wants to maybe be a tech startup someday, or maybe one day get into the FinTech Innovation Program. What advice do you have to them?
I would say, don't believe the hype. That was one thing that has stood me very well, is to just be, don't get carried away with things. Try and think very, you know, however cool or modern or new something is, or an idea is, always try and go back to basics. And to learn those basics, you just try and be, you know, a good, normal human being, and focus on your personal relationships, your own personal life, because you ultimately you don't have a yardstick to measure good or bad ideas against if you yourself aren't a normal consumer and have your own life and your own interests, and you know, so just be as normal a person as you can, enjoy yourself, do what you want, and those ideas, other things that you want to do, if you want to be an entrepreneur, just have a normal life as well. You know, don't forget that you're also a human, and if you lose that humanity, you kind of, it was pointless doing it in the first place.
It's an interesting spin, because everyone has all these new tech ideas, but you know, business is as old as the Bible, and the quote of the episode for me is what you're saying: business is all about trust, really, and that's what doing good business is, and getting to know people. So as cool as your idea, as virtual as the world might be, you know, as we know with the Drinkabouts, you pretty much do need to sit down and be around people. And one of the reasons you put everybody in the same spot, because I think you need physical density of people to get those ideas to happen. You know, you can't do it all online and stuff. So, Joe, before I wrap things up, what did I miss? Is there anything I didn't ask him, or anything that was on your mind?
Yeah, what I'd like to know is, how close have you come to jumping ship and joining one of the things that you research, because you just think it's great?
Good question.
Not well. I did it. I used to research Accenture, and I joined them. And when I left, a lot of the people I worked with were saying, "Oh, God, you know, it was." You know, at first I was a journalist, then I became an analyst, which was considered jumping the fence.
Yeah.
And then as an analyst, you know, I was analyzing the IT industry and Accenture, so I've already done it, and it's paid really great dividends. I love the company. It's a great company. It's got great people involved in it, and I was really happy I did that. I think because my very first job was my very first proper job was writing for a magazine that was trying to be like the Red Herring for Europe, if you guys remember that magazine. And so it was trying to write about venture capital in Europe and tech. And it launched in September 2001, I think. Basically, it launched just after the dot-com.
After the Nasdaq crashed in June or whatever.
Yeah. Okay. And just around, you know, September 11th. And so I spent a year trying to research VCs that weren't investing and startups that weren't going anywhere. And I learned very quickly that what the hype is and was. And so there are some companies I see that I just think, wow, that is a really solid idea. That's brilliant. That's going to be amazing. And then I look at myself and go, I'm not really sure I can add anything to them. So it goes back to that assets thing.
Sure.
If I see somewhere that I see a great marriage of what I know and can do with what they know and can do, then I'm always interested.
So you're not tempted to jump into one of these startups. You're just happy to kind of incubate them and help them along.
Yeah, for now, yeah. I mean, for now, I've the job I'm doing now is something I've always really wanted to do, and I'm very lucky to do it. So, I'm happy to help. I want to help people. I want to see new technologies. I want to see how business works, and I've got a lot to learn. So you can learn from that.
Excellent,
great.
Excellent. So, all right, we're talking about days. I think by the time this gets published, for people to apply. So, tell them again how they can apply. What do they do?
So they can go to the website fintechinnovationlablondon.co.uk. You can Google it, and the application form is on there. September the 8th is the deadline. So please get your applications in.
Yeah, and they get to hang out with you as well for like a few.
If they want, They hang out with me.
They hang out with you, and they can meet Joe at the end in March.
Yeah. Yeah. Oh yeah. You can meet Joe. Well, you can meet Joe whenever you want.
Yeah,
really.
any Friday.
Yeah.
Pretty
much.
Sorry,
I just basically invited the whole world.
That's fine. That's fine.
Yeah.
That's what we do anyway. It's cool.
We promote it every time. And what about? Are you on Twitter? If people want to get in touch with you personally, or do you not want them to?
I don't use Twitter personally much, but if you did want to find me, it's Bad Mood Masood.
Really? Wow. Bad Mood Masood. Okay. Awesome. I like this program from the beginning. I think it's a great idea. It just sounds like this whole pay it forward thing, which is kind of what we're trying to do with Silicon Reel, and just feature all the cool people out there, and hopefully people listen and get a bit of an education. I think that's what the Beards are doing with all their events. So I'm really curious to see how this turns out the next 7 months. We're going to be following it very closely.
Yeah, no, I'm very happy about that and very pleased. And thank you so much for having me on. It's been great.
No, thanks for coming on.
I think what you guys are doing is awesome.
Thanks. It's been fun. It was on a whim. It really happened randomly. If you don't know the history, I mean, we had doing London Reel here for like 2 years, and then I was like, I've never done anything about the Silicon Roundabout. What a douche. And so then I found Bryce, and then Bryce came on, and then boom, 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 it's Silicon Reel. So it's crazy how quickly it happened. But speaking of the Beards, what's coming up, Joe, for you guys? You guys are always busy.
Wow. Well, we just had a big summer party at the weekend, which was fantastically filled with rainwater, which was just great. I mean, it's lovely today. It was lovely the day before. It was lovely the day after. Great. But we launched our own beer. So we've got
what's it called?
No. We've got Fail Faster Lager and Minimum Viable Pale Ale, MVPA. See what we've done there?
Yeah.
And today we've just announced that we will be launching Silicon Drinkabout Amsterdam on September the 20th. So that's
big.
That's huge.
Fantastic.
That's huge. And maybe there'll be some more locations later in the year.
Okay. And obviously the Drinkabout every week. Well, I'll be there as well. And then you've got your Don't Pitch Me Bros monthly, and your next sizzle is probably 3 months from now, right?
Yeah. Yep.
Okay.
Lots going on.
Excellent. Thanks for coming on. That's the toughest seat in the house. It's very hard to be there. You did a really good job. Yeah. If you're listening to us on iTunes, you can watch these videos on the YouTube channel Silicon Reel TV, or on Twitter at Silicon Reel. We're really here to feature the people of the community. So if you have any ideas of who you want to see on here, just email us, let us know. And also, we're not only going to have the successes, we're going to put a few guys that have failed. We want a few guys that have just started up, and then obviously the founders and CEOs as well. So we're going to bring all of that at you. And yeah, that's it, guys. We say it's about the people at Silicon Reel. That's what you guys said, 90% people. So I'm really curious how this whole program goes. And thanks a lot for coming.
Cool.
Thank you.
Thank you.
All right, guys. Take care.
Of course, when you're an entrepreneur, you want to retain as much as possible, and you want the highest price because it makes you feel good. But if you take money from an angel or crowdsourcing platform, or for us at the wrong price, and you don't get to the next milestone, haven't created value, and you need to raise more money, going back to my Gutenberg story, then